All right. Okay, so let's get started. We are already a few minutes behind the schedule. So today I'm going to be covering, today's Thursday, so it's already, wow, 90% of the week gone, and it's really crazy how time is flying the last couple months. And we go into the last quarter of the year, quarter 4, and the market tends to be less volatile, if I can say, on the month of October. But I don't think it's going to be the scenario for this year, all right? Just because we had the Fed, the FOMC, cutting 50 basis points, so that changes a lot of perspective into the market, as well as RBA continue to pause the rates, but being hawkish. So that brings a completely different sense of what everyone was expecting in the beginning of this year, right? Everyone was expecting to actually RBA to cut 50 points in the, you know, as the year passes, and the Fed to maintain a hawkish stance. So not only RBA, I mean ECB as well, been cutting 25 basis points, 60 basis points, as we saw 2 weeks ago. And so really interesting how the market is developing at this moment. Okay, so first of all, we're going to be looking at FinLogic's economic calendar. Okay, so for those who don't have the link yet, it's really easy to access. You just type finlogic.com and then you press enter. You're going to get into this website, into FinLogic's website. You can click on tools and then come to economic calendar. All right, I've just selected only one country, but let's select all and let's put into this week. Just remembering this is Australia time, so whatever time we say here, it's going to be for Australia. But you guys good on math, so you guys can know what time is going to be on your country. All right, so today's Thursday, 26th of September. We had some really interesting releases of the PMIs for Europe. So let me just select Europe, otherwise it's going to be too much. So we had on Monday and Monday we had the releases of the PMI, the services PMI and the manufacturing PMI. Really interesting what's just happened on here, right? So if we see, if we see on the Euro Services PMI, the expectation was at 52.1, and the actual came in at 50.5. So that's pretty much 1.9 lower than what was, around 1.5 points lower than what was expected to be. Okay, so that is really not great. And I don't know if you guys have heard about it, but the PMI chart, okay, let me grab the PMI chart here. That's services, okay? So let me put in the chart line and let me put in the line. Oh, so we have data into 2023, and we've seen the PMI from Europe being at 47 on its lowest on the 24, well, into this data range that we have right now. But into 2023, the lowest that it has been was 47.700. Okay. Now, since then, we saw it coming all the way back up to 53 and now dropping to 50. Okay. I don't know if you guys have heard that, but I've mentioned on the strategy video I've done that if the PMI line is below the 50, okay, below the 50, this is considered as a very big risk to recession, okay? So this is taken very negative, of course, for the euro, all right? Even if we look to euro dollar, let me put into the 1 hour chart. Even if we look to the 1 hour chart on euro dollar, we're missing some price here, but I'm going to tell the team to fix that. So we saw this big spike up on the release of Europe good data on Monday. And then we saw this huge move down, okay? And now we're seeing backing up. Well, my opinion is that, of course, this move here won't make over the whole market, but it's good opportunity to enter the market, right? My honest review on euro dollar is bullish and that we are continuing to go higher. But we're going to talk about that later. So coming back to the economic calendar, sorry, we saw the services PMI, as I was saying, this week. We saw the services PMI, as I was saying, being much lower than what was expected, 50.5. Now, the manufacturing PMI was expected to be 45.6, and it came in at 44.8, okay? Hence, why this whole move down on euro dollar, okay? Well, some people may think, well, it's because we have a support or resistance in some area, right? Look at that. So there's a top here. The market touched that top, so it becomes a resistance, and therefore the market drops because it found the seller. Partially, it's correct. Okay, partially it's correct. But what moves what actual moves the prices on the market? It's not resistances and support areas. Okay, because let me do a very simple test with everyone here. All right. So I just want to show on a very quick way, we're not going to spend even 5 minutes on that because everyone comes back to technical analysis, and technical analysis. I'm not here to talk about it, but I've just remembered something that is really cool, okay? It's just getting out a little bit off the track of what we're going to be talking today. So we have around 7 people here today. So please, everyone here, just send a random number from 0 to 10 into the box, into the chat. Just a random number from 0 to 10. It doesn't matter if your number, someone said a number already. So we got a few numbers already. Cool. I need more. Send me a bit more. And now we will be doing this for everyone. So from here, I'm sorry, from the top there to the bottom here. Okay, cool. So we got 1, 5, 8, and 4. All right, that's enough already. We got 4 numbers already, so that's good. So I'm gonna equally divide that. Sorry, wrong one. I'm gonna equally divide that. I'm gonna use Fibonacci to see where is where. Okay, let me just take off this background and save it. Okay, so we have number 4. Okay, so number 4 should be somewhere. So pretty much from the whole chart, okay, from the whole top to bottom where we can see the chart here, I've traced the Fibonacci. And what I'm doing is I will dot plot these random numbers that everyone just sent here, and just dot plot some lines on these numbers. All right, so the number 1, it will be somewhere on here. All right, let me change the color of it. Let me put it to a red. No, maybe like purple. Yeah, cool. Number 5. The 5 is right here. Change it to purple as well. Number 8. So 6, 7, 8, somewhere on here. Okay, cool. Number 4. Number 4 will be somewhere around here. Okay, perfect, cool. All right, we've just did random lines on a chart, okay, like literally random. You guys picked the numbers. What can we look at it is, let me just, I've put the wrong line, but I can just come to style and do extend line. So now we can look back into it. So then here as well. Okay, and the last one. Perfect. All right. So we have 4 numbers, 4 lines. 1, 2, 3, 4. Okay. Now let's just have a look at what prices did those lines touch it. Oh, nice. Look at that. All right. Let me get my pen here. Okay, cool. Look at that. It's just a resistance. So cool. Oh, another one. Support. Okay. Interesting. Let's move on. Oh, perfect. Another resistance just here and another resistance just here. Like literally a consolidation around here. What else? Oh, that's perfect. Look at this. Resistance as well. And now it's support. What else? Oh, look at that. Out of nowhere comes in a resistance. So, and now out of nowhere comes in a support. So we've built the range. What I want to show to these is we've just drawn random lines into a asset class, euro-dollar, okay, into a euro-dollar chart. What does that show to us is placing lines in somewhere around here or there. Yes, it makes sense once it touches there and then comes back. But if it doesn't touch there and continue, then it's a breakout and then it becomes a support and then it goes and makes sense again. So we are always trying to figure out the market through lines when it's actually what moving the prices is, such as data, all right, fundamental data. Why? Because this is an economy. It's 2 economies, one economy versus another economy. So we have Europe economy against USA economy. When USA is doing better, then US dollar is stronger than Europe. When Europe is doing better, then euros is stronger than US dollar, and vice versa. Okay, so just don't get fooled into this idea that tracing lines on your chart will make you how can I say that, will make you a good points to enter or exit, or sorry, will make you good points to know the direction of the market. Okay, but bear in mind, I'm not saying that technical analysis is bad, because in a sense it's really good when using like Fibonacci tools, because you have a study behind it, when using moving averages and etc. But to find the direction of the market, definitely go for the economic calendar, definitely go for the context of the fundamentals of what is happening. All right. So thanks everyone to participating from this little thing I've just done. So thank you, Santi. Thanks, Steve, Barry, Zodwa. Thanks everyone. Okay, cool. Let's continue now. So as I was saying, we had the Europe PMIs. Services PMI came in very, very, like really bad, as we just saw. So, you know, we do have the big man coming in to talk tonight. Well, at least 11:20 for me. So Jerome Paul will be giving a live speech. I always suggest everyone to watch it if possible. If you're not on work or if you're not busy with anything, give a look at Jerome Paul giving his speech. Okay, what will be most important to this speech is that most of the people, most of the market participants, they are waiting to see if this is true. What I mean by this, well, the Fed Watch, called by Fed Watch by CME Group, have posted that they are looking to do another 50 basis point in the 7th of November. All right, so 60.7% of the market is expecting another 50 basis point from the Fed. Okay, it just doesn't end in there, because in the 18th of December, they're expecting to do another 25. So that is 125 basis points, okay, that correspond to 125 basis points correspond to 1.25% of interest rate reduction. So we were at 525 to 550, and now they're looking to decrease to 4.0 to 4.25% in interest rates until end of this year. All right. And remember, end of this year is not 12 months away. It's not 10 months away. It's 3 months away. As I just mentioned at the beginning of the webinar, we are entering Q4. So there's only 3 months left for the whole year. Okay. So really interesting how the market is specifying it. And definitely what the listeners will be paying attention into the Jerome Powell giving speech will be forward to, will you cut another 50 basis point, or what you're going to do? Because 2 weeks ago, all right, the majority was expecting a 25 basis point. Well, only 1 week ago, I thought it was 2 weeks ago. Only 1 week ago, 38.8% was expecting, sorry, 61.2% was expecting a 25 basis point cut. And only 38.8% was expecting a 50. Now the game has changed. Pretty much changed it, like literally changed it. 60.7% expecting a 50 basis point, and 39.3% is expecting a 25. Just bear in mind, October, we don't have a meeting from the FOMC. We don't have interest rates decision from the FOMC. We're only going to have the 7th of November. And bear in mind as well that in the 5th of November, okay, 5th of November, we have elections. All right, so elections will be decisive to what will the country follow up on January next year. If it's going to be Trump, if it's going to be Kamala Harris, or if it's going to be who else, you know, we never know, because USA, you can't predict what's going to happen. When you predict what's going to happen, then it comes in and it's a completely different thing. So really unpredictable scenarios over there. Now, talking about the USA, I don't know if you guys saw, but Trump has come into a beautiful idea to bring more people to vote on him, that they will take off, once he's in charge, of course, they will take off the tax, the after hours tax onto the population. So what pretty much he's trying to do is, he's really smart, okay? He's really, really smart. So think about it. The USA, the majority of people works more than 40 hours a week. And whatever 40 hours, whatever more you do, whatever 40 hours plus you do, it's considered as extra hours, okay? So you're doing after hours, or you're working at somewhere for your how to say, for your work or anything like that, you're going to exposures and etc. So if you're working 45 hours a week, these extra 5 hours is extra work, okay? And the employee have to pay you as well. Now, what Trump, well, not only USA, majority of the world is like that. I'm just not sure about the 40 hours. Some countries may be more, some countries may be less. I don't care. Anyways, so let's say you work at 45 hours. Trump is pretty much saying that the 40 hours that you worked, of course, will be taxable. Okay, so you're going to have your tax rate on that. But the 5 hours that you worked plus extra hours, you're not going to be taxed. So if you make $1,000 into these 5 hours, this is what you're going to get, $1,000. Now, if you make $1,000 into 40 hours, then you may have 10% of tax to pay. Okay, so this, of course, brings a lot of people on top of Trump. Okay, and he has announced that last week, but it just came across to me today. So really interesting how these things work. Anyways, another point that I want to bring is that he aiming to do this is he's looking to the truck drivers, he's looking to the buses drivers, he's looking to people that are more into the front end of the society, people that are more blue collars and etc. So I really want to see what will happen on the 5th of November and what will happen on the 7th of November. We still have a month away, right? Not even a month. We have more than a month and 2 weeks away, but still, this is shaping the market already, and we can see on the US dollar index, okay? So if we look to the US dollar index, it did strengthen a little bit yesterday, but it continues to go down. Right? So if we zoom out a little bit, we have, let me put in a 4 hour. There we go. We have since 2024, we start 2024, yeah, 0.25 base points rate cut on CHF. That was very expected. So we started on here and we're pretty much ending below the year, starting the year, okay? So the US dollar index made some good money, some good, sorry, not good money, but still made some good up movements and now coming all the way back down, okay? So what does that shows to us? Does that shows to us that the US dollar is over? Who thinks here that the US dollar is over and it's just short US dollar for the entire rest of the year? Or who here thinks that the US dollar may be up, right? So when we have it, sorry guys, just a minute. Sorry. So when we had the 50 basis point cut from the Fed, oh wow, I didn't know I zoomed out that much. Okay, let me take this off. Take this one as well. And come back to the 1 hour. Perfect. When we had, since we had the 50 basis point cut from the Fed, nothing had changed. Okay, so we are still on this range, right? Yeah, breaking through a little bit up, breaking through a little bit down. What I think, what we can expect into the next coming days, into the next week, is a up move, okay, towards this area. So towards the area of 101, yeah, let's say 101,700, just because it's a rounded number. It's a psychological number on the market. So moving on the economic calendar to Friday, tomorrow, what will we have? We won't have much happening until later at the night, but we have inflation rate year over year. That's the preliminary for the month of September. So September last year to September this year. For France, we have German unemployment change rate and German unemployment persons. So that doesn't change much. What it's most important is the Germany unemployment rate the month of September. So that's really important. So it's expected to be 6%. So no changes from the previous month. Okay. Now later on, that's going to be pretty much 6 p.m. At 10:30 p.m. we're going to have Canada GDP month of a month and the Canada GDP month of a month July. So this is the preliminary of August. It doesn't tend to make much volatility into the market. What actually matters is the actual Canada GDP month of a month, not being the preliminary. Okay. Then later on at the same time, 10:30 p.m. we have PCE price index. This is going to be huge for the USA. And then we have personal spending as well and personal income. Of course, the personal income will decrease. Okay, sorry, will increase because we had a decreasing on the labor force, plus we had an increasing on the average hourly earnings. If we totally all the actual, I'm not talking about one specific here, I'm talking about an averaging, okay? When we look to the averaging of the average hourly earnings, we are looking to growing substantially towards more than 0.4%, right? So looking at 0.4, more than 0.3. So I'm looking at 0.4 to 0.5. All right. So I think that will be it for tomorrow. We don't have much happening. So yeah, that's pretty much for the economic calendar. It has been a very, very slow week, except by the RBA. And of course, the Euro area PMIs and unemployment rate is going to come tomorrow for Germany. It's going to be really important as well. Remember what I always say. German is the biggest and we in Europe, and we have to pay attention on the releases because that makes total difference towards what we will see on Europe. Okay. So yeah, let's go. Okay, moving on. We have some time yet, so let's have a look at the market. So we had the Australian dollar yesterday going all the way up and now coming all the way back and now continue to go all the way up. As I told everyone on my video yesterday, I'm expecting more strengthening to come for Australian dollar. So where's my pen? There we go. So I'm not expecting this move to extend downward, okay? I'm expecting this to be pulled back and a continuation to the uptrend. Same goes for EURUSD, okay? Oops, sorry. Same goes for EURUSD. We've seen this move to the downside here, upside and then downside, but I still see a continuation to the upside. Just because it doesn't make any sense for me that US dollar being weak at this point, being strong at this point. Most likely, we will see a USDJPY as well coming back lower with a 25 base points hike from the Bank of Japan. Let me put this in a 4-hour. Very good. Okay, zoom out. Yes, perfect. Okay, most likely we will see USDJPY coming back lower to below these lows until end of the year. Okay, we've seen some retraction at the price now, but still we may see some retraction until 146, that a random round number, psychological number, and then a continuation to the downtrend towards somewhere around here until end of the year, 138, sorry. So really interesting how the Japanese yen is being shaped, just because what is happening now is all the central banks around the world, like ECB, the Fed as well, even SNB, okay, Swiss National Bank, the Bank of England, not the RBA, okay, not the RBNZ, but yet the Bank of Japan. So all of these guys have cut. All right, these guys here are on hold, but this guy here is hiking. Okay, and we may see a continuation of hiking. So what is happening is, so pretty much everyone was buying US dollars at first and euros. Okay, then we saw the Bank of England cutting and the SNB cutting as well. Then the ECB cut, and then everyone moved back to the US dollar, and then US dollar Fed cut, and now they moved to RBA and RBNZ, and probably going to move to Bank of Japan. So my trade here is based on that rotation of capital. All right. Investors seeking higher yielding into their capital, higher turnover into the EWI, and therefore they will be moving towards somewhere that are either pausing and having a hawkish stance, or either hiking and having a continuation of, how can I say that, have a continuation of hiking phase towards the market, and that is the Bank of Japan. Okay, and that's why I think there is plenty of opportunities for us to trade into the market right now. So if you haven't yet been trading, definitely is the time. Okay, such goes as well to gold. If we look at gold prices, gold prices is trying to hit all-time highs again. That's a 4-hour chart. Just a month ago, sorry, not even a month ago, just 2 weeks ago, we had the prices stagnating into this area right here, breaking through very strong to this area, coming back for pullback and a continuation to the uptrend, setting all-time highs into 2,668, if I'm not wrong. Let me just see here. 67, 2,667, 2,670, sorry, 2,670. So Swiss have sent a message. Let me just, I got in late, so I'm supposing you must have talked about the CHF, USD CHF. No, not yet, not yet. We're gonna get there in a second. So, you know, when we look to gold and Australian dollar, this just doesn't come to my mind how easy this trade can be, this opportunity showing off as well. We see a huge uptrend on the gold prices, and then we see a move upward on the Australian dollar as well, because of the commodity exportations we do in Australia. And therefore, higher gold prices, okay, gold going up then means the Australian dollar most of the time tends to follow that move, because most of the times what happens when gold go up, iron ore go up as well. So therefore, Australia exports iron ore. So the balance of payment of Australia be bigger, and therefore Australian dollar goes up, because people will try to buy iron ore from Australia, therefore they have to buy Australian dollar. More demand into the Australian dollar, higher Australian dollar prices. Combine it with a hawkish RBA looking to no cut anytime soon. Therefore, we have a good opportunity into the market. So that's my view pretty much for gold and Australian dollar. Both of them, I'm really bullish on it. Now, let's cover USD CHF. As our colleague Santi have just mentioned it, we had a 25 basis point cut from the SNB, Swiss National Bank. I always try to swish. It's not swish, it's Swiss National Bank. So it is a interesting time on the market. You know, so I only had one scenario in mind, and that was the weakening CHF scenario, and of course the strengthening CHF scenario. My conditions are for the strengthening CHF scenario would be a 25 basis points cut, as we had, a hawkish forward guidance with little to no downgrade in the growth inflation forecast. Because bear in mind, we always need to understand something here, okay? And I've always talk about that, always. So when we have whatever cut we have, it doesn't matter, 25, 50, 100 basis point, it doesn't matter how many basis points they want to cut. If they want to cut, they're going to cut. If they want to pause, they want to pause. If they're going to hike, they're going to hike. What it matters is, what did they talked? What's the forward guidance? Okay, the FG forward guidance. So that is what matters, okay? And especially with what are they doing? They're upgrading, they're downgrading the growth, or they are forecasting more, they're forecasting more inflation, they're forecasting less inflation. So what are they doing here? Okay, another signal that I always look to is, what will the central bank, in this case the SNB, is comfortable with the recent CHF strength or not? Okay, and of course the market expectation is that the CHF will strengthen, as the market will lower the likelihood of future rate cuts, and that's exactly what we've seen this live. Okay, live. So we've seen a 25 basis point cut, and then we saw the CHF strengthening against the US dollar, coming back a little bit, and now continue to strengthen against the US dollar. Okay. My expectations is towards, let me just zoom out. Okay. So my expectation is a move down towards 84 to 10 to 84 to 10. Just put this green. Perfect. 84 to 10. Sorry. Okay. 84 to 10 is my target for USD CHF. I know it's a very small trade, very, very small trade on the 5 minutes, but still very positive risk to reward, even if, you know, we wait for a little move up on the market, maybe somewhere around here, and a stop loss above these highs. We still have 1 to 2 key, 1 to 2 RR. Okay, so very positive. Now, if we look to a high time frame, let me zoom out. We are on a range. Okay, so range, we are very on one of the top of the range. We even can continue to go high, and then we get stop loss here, and then we'll probably enter with another position on the top of the range to bouncing back around the 84 210, or this trade works. Okay, either of those two options. Now, what the S&B have done is maintaining no downgrading on the growth, as well as no downgrading on the inflation or the uptrend, but maintaining a hawkish forward guidance. Okay, so this is why we're seeing the CHF gaining strength. So same goes if we look at the opposite, CHF JPY, for instance. So CHF will be going up. Okay, let me just zoom out. Cool. As we can see here, same goes for CAD CHF going down. CAD CHF will be going down as CHF is strengthening, as we just see here. Okay. Now, those three options, I rather trade USD CHF because it's the most, how can I say, clear scenario. Yeah, of course, we do have Euro CHF as well, but again, is the most clear scenario. Is yeah, this one, risk reward's not great. See, really not great. Take profit would be here, stop loss would be here, not great. Best trading scenario would be USD CHF. Okay, as we're seeing right now. So that is a really, really good trade. Okay. All right, guys, this is all for today. Thank you so much to come, everyone. I hope everyone had a good time with me. I will be live again next Tuesday. So stay tuned. Don't forget to watch the swing trading strategy I've posted on the YouTube channel, on ACY Securities YouTube channel. And I see you on Tuesday. Yeah, not a problem, Sweets. Thank you so much. Thanks, Santi. Thanks you. Thank you, Matthew. Thank you, guys. All right. Thanks. All right. Cheers. Bye-bye.